GM, everybody, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading, and we're going to kick it off here with the SPY pulled up here on a monthly time frame. And again, we want to zoom out and see what's happening on the larger scale. So what I have pulled up here is the monthly. Every single one of these candles represents 1 month of trading. And we're going back to pretty much 96. So you can see back in 2001, when we broke below this cloud and started closing below, that spelled bad trouble for quite some time. So 2001, 2002, you had the bear market. Same thing again back in 2008. Broke below the cloud, and that's really when things started to get ugly back in 2008, 2009. You can see we've tested this cloud multiple times over the past really decade. And you can see, almost tagging it here back in 2016, tagged it here back in 2018. This is pretty much where we bounced. We had a little bit of a flush and panic selling back in the COVID lows, but again, that was quickly recovered with this V-shaped rally. And yeah, we've been in a downtrend on the macro scale really since January of this year. So it's been a very difficult market to trade, and it's been very, very difficult to find a place where you can park capital. Typically, the traditional bonds to equities ratio hasn't worked at all, right? I mean, bonds are just continuing to sink and lead lower. Obviously, that's has to do with rates and a whole bunch of other factors. And equities as well, continuing to sink lower. So it's been very difficult to find a place to park capital, which is why we have our hedge on with the inverse trade against the SPY. So right now, this is very, very vulnerable, right? If we break below the, October's low, right, that's going to put us below the cloud, and we don't like to have closes below the 50-month moving average. So very, very important point here in the market. I would call this an inflection point. If we don't, see some sort of strong rally, I'm going to be expecting that these lows are going to be vulnerable. So it's very important to stay open-minded in this market. So last week we talked about this 362 level. How we felt like this was a very important level. And again, we're closing below that 362 level on the weekly time frame. So again, this is price weakness confirmation. This is not strong price action, and we're still far deviated from that 10-week moving average. So again, the weekly time frame also in a downtrend. Now, as we zoom in on the daily, things start to get a little more clear. You can see, really what's happening a little closer to home. So on Thursday, we had the CPI data. And, this past week, I said I'm not going to be doing anything until we get some CPI info. Well, we gapped down really hard on Thursday. And then really, the majority of the day, we just kind of ran all the way up to the 10 SMA on SPY. So a strong bullish reversal candle, but as I always say, one day does not make a market. So S&P actually closed inside the cloud and no trend. The Dow Jones has been showing relative strength. Ignore these. Dow Jones has been showing relative strength and still is inside this cloud. So the Dow Jones has been leading, but the indicator, the market that we really like to track is tech. And yeah, tech didn't even make it up to the bottom of the cloud. And then you can see on Friday, I pointed out, hey, QQQ is failing at this 10 SMA. Be careful. And then we took out Globex lows early in the day. And I said, hey, I'm not expecting a close an uptrend. And we just sold off the rest of the day. It was a very nasty day on Friday. And you can see I have this horizontal line, which was another important level back from the 2020 pivot. So below 262, not great. All right. So this type of price action, especially with the NASDAQ still in a downtrend, it never made it into no trend. It's been in a downtrend. And when we see tech, lead the way down, it's going to weigh on the market. You've got your Apples and you've got your, Microsoft and your Teslas, right? That's going to to hurt the general market. So this week, we're going to have to trade what the market gives us. And I don't want to sound extremely bearish, uber bearish, because, this market can, have some, 3, 4, 5, 6 day rally. But if we do go into an uptrend, right? So if we break above Friday's high, so if we get on the SPY, if we break above Friday's high and we do go into an uptrend, it's going to be the type of uptrend where, we're not full throttle, maybe you're a quarter throttle or a third of the throttle, try to scale, put your stops in, try to make a little bit of money, manage your expectations. This market is very heavy. We have a lot of geopolitical risk. We have a lot of, Fed and rate risks. And yeah, this has been very sloppy trading. So if we do go into an uptrend, don't expect that is the bottom. Okay, I don't expect this to be the bottom either. If it ends, perfect. I would love that. But the fact that the Nasdaq, is lagging on the way down, not what you want to see if you want to be bullish. So we're still in no trend on the SPY, and yeah. This does not look great. So if we do go into an uptrend, manage your expectations, make sure you're scaling quicker than normal, and make sure you're trading at least, a quarter of the size or a third of the size that you typically would in an uptrend, and be quicker with your scales and put in your stops, okay? So you have to manage your expectations in this bear market. Like I said, I don't think Thursday was the low on the market. I think this market, until it can start to prove itself, to prove me wrong and prove everybody else that we've got some momentum. Yeah, I'm not going to be feeling very confident about any sort of upward move. Okay, if we can get back above this previous pivot on October 5th, basically 370, 950, if we can get back above that, that would give me a decent amount of confidence that, hey, maybe we come and check the top of this cloud, this 50 SMA, which is where I would be scaling heavily and expecting this to be rejected and roll back over once again. So you have to know your levels. You have to understand this is not a bull market, and we are in a bear market, and you have to manage your expectations. And so we're going to continue to trade our system, our strategy, and that is getting long in uptrends and protecting capital and no trends and downtrends. So again, if we get an uptrend above Friday's high, I think we could easily make a move up to this previous pivot, see how we react here, and if we start to confirm price strength above, yeah, I think that's a potential move up to the 50-day moving average, which is the top of the cloud. Not really expecting much out of the market moving forward. We really need to be cautious and protect your capital. So that's really the message that I want to get across this week. Let's talk a little bit about Bitcoin. I posted this chart on Twitter, I don't know, about a week ago, and you can see, Bitcoin has just been it's been nasty, right? Just like the market. I think the Nasdaq's down like 30% from the highs. Very nasty market. So you can see a series of lower highs, lower lows, of breaking the uptrends line and flushing. And, we were, once again, I would call this an inflection point. We're sandwiched between the bottom of this trend line and the top of this trend line, and also right below this cloud. So this cloud is the 10 and the 50-day moving average. We're hanging out right here. If we start breaking below the October 13 lows, I think we potentially see another flush down. But yeah, that's not what I want to see, but that's what you have to be open-minded to. If we start closing above, the cloud, this level right here, this previous high, 25,000, that's really my level. We're all flip bullish. If we get back above 25,200 on Bitcoin, I think the bottom could be in on crypto. Above this, I'm going to be loading the boat. And until then, I'm being extremely cautious and waiting for this to kind of play itself out. Crypto has been very highly correlated to equities lately. I think it's still viewed as more of a tech-focused industry. And when you have the NASDAQ, which is a tech-focused ETF, QQQ, tech-focused ETF, and it's leading the way lower, you got to manage your expectations for crypto, okay? So until things start to change, you have to be very cautious and expect lower prices. So right now, I'm expecting lower prices. And if we go into an uptrend, then again, I'm going to be playing it very, very close and being very nimble. I'll be getting in with good entries and scaling quicker than normal with a third of the size that I typically would trade with, or a quarter of the size that I would typically trade with. And moving my stops, right? You don't want to be stuck long in a bear market with price continuing to decline. So until we see prices back above this cloud, until we see some key levels that get broken to the upside, I'm going to remain bearish. And these reversal candles are still going to be short term, short squeezes, oversold bounces. And when we have one day like this and the next day we go right back down, that tells the story of all you need to know, right? So if Thursday was a bullish reversal candle and then the next day we came right back up to this 380, that'd be extremely positive. But on Friday, again, gap up and just got sold all day long. And so that tells the story. That tells the story that, hey, people are continuing to be cautious about this market. Things could definitely go lower. So be very, very cautious in this market. I know we're down, roughly 30%, but we could continue to go lower. Okay, so be careful, manage your expectations. If we go into an uptrend, make sure that you are trading much lighter with size. And until then, we're waiting. We're being patient. We're protecting capital because we will go into an uptrend eventually. I do expect us to go into an uptrend before the end of this year. And I think that uptrend could be fruitful. If we have things that line up with earnings and, maybe, the inflation data, starts to come in a little better, which I'm expecting that it will. We could see, a prolonged 3, 4, 5, 6, 7, 8-day rally where we could make some money. But until then, this is very difficult to trade. And it's also difficult to short because we're so far deviated from these highs that it's tough to press short down here. So that's all I got for you guys this week. Make sure that you're, being cautious, staying open-minded, being nimble, trading with smaller size, and being patient. That's the biggest thing, is just have patience, wait for this market to give us a good signal, and then we'll hit the gas pedal. All right, see you guys in the open.